Welcome to the Forex Weekly training. I'm Mike Swanson, founder of TradeWest Forex, and today I'm going to be teaching you about price action trading. I had a lot of requests for this in a recent survey that I did in an email, and a lot of you were asking for price action trading, some training on that. So I'm going to be teaching you the flag breakout pattern today. So what is price action trading, first of all? Well, a lot of people refer to it as trading the charts naked. Basically, you don't have a lot of indicators on your charts. You basically have almost none. Sometimes for me, I do put a moving average on to see the trend easier, but even that's really not necessary. So let's take a look. A couple other things here. There's also trading emotions that form patterns on the charts. So that's what you're going to be looking for, is the patterns formed by traders that are putting stops at the wrong places, are trading purely by emotions as far as when they get in and when they get out, and that helps form these patterns on the charts. And then the next thing here is price action trading can be used on all time frames. A lot of people think price action trading is for like the 1-minute charts, 15-minute day traders, and that are kind of watching the price. That's not what it actually means. You can price action trade on a daily chart, in fact. So it's not something where you actually have to watch every little price movement. A lot of people kind of confuse those. Okay, and so let's talk about the flag breakout pattern rules. And I'm just going to jump right to it and show you how this pattern works. It's actually very simple. There's 3 steps. Okay, step 1 is locate a short-term trend. Okay, so this would could be a pullback in the market. But it must be a significant move, not just a small little pullback. It must be a pretty significant sized move, and I'll show you some examples of this. And the way you determine significant is by looking at the surrounding candles, and the short-term trend that you're looking at needs to be significant to the rest of the chart. And also, we prefer it to be in the direction of the major trend, so that you'll have a higher consistency if you stick with that major trend where the market's moving overall. Okay, so next things here, looks like my little step 2 is not showing up for some reason. Let's see. Oops. Okay. Find the channel. So step 2 is find the channel, and it must occur immediately after the short-term trend. Okay, so you find the move, the trend, wait for a channel or look for the channel. Okay, you don't you can usually look for these on the chart. You don't wait for it. You find the trend, find the channel, and then you're going to be looking for the setup. Okay, so like I said, it must occur immediately after, and then what you'll need to see is a pullback in the opposite direction of the trend. Okay, so if the move was going up, look for a channel to be coming back down in the opposite direction. If the move was going down, look for a short-term channel going slightly back up or flat. And so that's step 2. And I'm going to show you some examples of these, don't worry. Step 3 is trade the breakout. Here's where you actually execute the trade. So what you'll do is wait for the price to break the channel in the direction of the trend. It's been tested and proven that there's a higher probability that the market will break out during these flag patterns in the same direction that the previous move was, the same direction of that short-term trend that's formed that you found. Okay, so and also another thing I want to note here is you can avoid false breakouts from news events. So watch out for the major events. Don't be trying to jump in the middle of that. A lot of times it'll just whipsaw and be a lot of false setups. And also you can use the market sentiment, support and resistance information that's on the Informer platform, so that way you don't find yourself buying into a significant level or trading into a significant amount of resistance. Okay, so that is the rules. Now let me show you some examples of these. Okay, first here we can look at the bullish flag breakout example. Okay, so what I have here is, let me grab my little drawing tool. What I have here is a trend, a short-term trend was moving up. That's what this red line is I drew here. Okay, so the market was going up. Very clearly it's significant compared to the rest of the market. Okay, You can see it's a pretty good move. And then you have a channel, step 2, remember channel. You've got some slightly lower highs forming here, and a little channel is what you need for step 2. And now it doesn't necessarily have to be coming down. As long as it's flat, you just don't want it to be going up for this pattern. And we want it to be coming down, and we also don't want it to come too far down, right? We don't want it to go clear down here, for example. There's a certain point where it's no longer valid because you've retraced. If you retrace too much of that initial trend right there, then it's not valid anymore. Okay, so maybe a rule you could put in place or test out could be, say, 50%. If it comes back more than half of that initial trend, then you might not have a valid setup anymore. Okay, so that is the flag. Now it's formed. Now where do you take the trade? Well, step 3 is we want to take the trade in the same direction of the short-term trend that we found, which would be long in this case, right? It's a bullish signal. So we would go long on the breakout right over here. Okay, so there's your break. I mean, you can wait for it to push a couple pips above. You can wait for a close. That's things you can test on your own and see what fits you best. But there you see the trend took back off in the same direction that it began. Okay, and you can apply other indicators if you'd like, but what I'm teaching you today is just pure price action. There's no indicators here. It's 100% price candles. That's it. Okay, now let's look at the bearish flag breakout example. Okay, here is the market moving down. So we're looking for a short-term downtrend in this case for bearish. And we see, it's a significant move compared to the rest of the movement we see. So this is definitely step 1's covered. Step 2, find the channel. Okay, so it started forming the channel here. And right over here, step 3, you get the breakout to go short. In this one, it moved pretty good. So if you didn't take profit in this, that's fine. It pulled back into the channel, made a lower high, and then took off down here again. So again, another one that continued in the direction of that initial trend after the channel. You can see kind of this looks like a flag just upside down in this case. But that is the setup. It's really easy, but they're very effective. The key is just to not draw them too close. What I mean by that is you don't want to be drawing, there's probably 5 other patterns in this. You don't want to be drawing every little tiny flag pattern you find. The key is to find a significant move in the market, and if you don't see a setup, move on to the next pair. Don't force a setup based on these smaller moves. So that's the setup. It's pretty easy, as you can see. And we're going to go into the Q&A here in a minute, but you can get these replays on the blog, TradeWestForex.com/blog. You can also go on to the Patreon page. That's patreon.com/forex, so Patreon, patreon.com/forex. Probably could have put that link on here too, but anyway. And you can also download a free tool. Like I said, you can use the market sentiment as a filter. We can talk about that in the Q&A, but you can download the free tool for that, TradeWestForex.com/informer. Now, before we go into the Q&A, I want to mention that I'm actually putting together a workshop on price action trading where I'll be teaching more patterns like this. So stay tuned for that. I'll be emailing more information on that. We'll probably talk about it in one of these upcoming trainings. But I hope you enjoyed that lesson. Let's go ahead and we'll get into the Q&A now.